MGM Resorts reported earnings after the market closed on Wednesday, and results looked really solid. Not a lot of huge numbers coming out of the company, but the market's reaction, which you can see here, extremely positive. Shares were up 17.7%. Part of that is part of the thesis that I've been talking about here on asymmetric investing. The company is buying back stock at a very rapid rate. Sounds like it will continue to do that for the foreseeable future. I'm going to go through a few quotes that management gave us. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's go through some of the high level results. And you can see that overall revenue up 7% to $17.2 billion. This is for the full year. China segment adjusted EBITDA was $1.1 billion, an increase of 25% from a year ago. This is because of a rapid improvement in operations in Macau. Basically, when the Chinese economy started to open up early last year, that was really bullish for the company. So no real surprise there. They also repurchased 33 million shares in 2024, a little over 8 million shares already in 2025. So that buyback pace is continuing at a really rapid rate. We're also accelerating revenue growth throughout 2024 through BetMGM and expect to be profitable in 2025. You can see here the breakdown of the company's adjusted EBITDA in this chart here. This goes all the way back to 2019. They even took 2020 out of there. That's because the results were so bad in 2020 because of COVID. But over the past couple of years, things have improved. Now, not a lot of growth in 2024, but that's okay because this is now a cash flow business and a great value for investors. But you can see that Las Vegas, $3.1 billion of the company's EBITDA, that's really where most of the results are coming from. $1.1 billion in regional casinos, and then another $1.1 billion coming from MGM China, which is their Macau operations. BetMGM is kind of one of the pieces of optionality that you have with MGM. Revenue is up 13% on an adjusted basis to $2.1 billion in the quarter. Monthly active users, almost 1 million people. So getting to be a sizable business, but this is not a market leader. They're probably going to be number 2 or number 3 in most of the markets that they operate. Online sports betting, this is what's getting most of the attention from the market with companies like FanDuel or DraftKings, but really it's iGaming where BetMGM has most of their business. So they are able to tie to the business to their physical operations. So they do see some demand from customers who are using BetMGM and then end up coming into their casinos, whether that's in regional casinos or in Las Vegas. And this is a look at some of the profitability numbers. You can see this revenue growth here, 7%. iGaming was the strongest at 13% growth, but they're still losing money. Adjusted EBITDA is negative, and so is net income. This is a 50-50 partnership, so they are not consolidating this into their balance sheet or their income statement. So not a lot of impact so far, but 2025 expected to be a year where things are doing a little bit better, where they're able to get to profitability in this business. Now, what I think is ultimately most important for MGM is that it's a really good valuation and they keep buying back stock. So you can see that corporate expenses going to be relatively flat. Capital expenditures, not a ton of new capital expenditures, approximately $820 to $850 million domestically, and that includes $600 million in maintenance capex. And the remaining, the little bit, is for growth. They're doing things like redoing rooms at the MGM Grand. It's something they talked a lot about on the conference call. So there's going to be short-term impacts, but that's something they're just constantly going through. Always keep an eye on this debt. Now $3.4 billion worth of domestic debt, and then another $3 billion worth of debt that's held in China. So they do consolidate that because they own over 50% of the MGM China business. So that does show up on the balance sheet, but the domestic business, just $3.4 billion worth of long-term debt. And here you can see their liquidity. And this is something you always want to keep an eye on, because if they have excess liquidity, which they say they have $671 million right now, it means that they can do things like buy back stock. That's exactly what they've been doing since 2020. This is the shares that they have bought back. So that's now up to 200 million. And in the most recent month and a half or so, management says they have been doing that. It says 3.4 million shares were bought back in the fourth quarter of last year, 8.4 million already in 2025. The CEO, William Hornbuckle, goes on to say the stability of our business and the valuation of the Macau business that is publicly traded, so you can get an idea of what that's worth, and the fact that BetMGM is getting to an inflection point means that if you add all that together, the core business is trading for 4 times 2024 adjusted EBITDA. Now, historically, you would expect a business like MGM Resorts like MGM Resorts to trade at 8 to 12 times adjusted EBITDA. That's a proxy for cash flow. So what he's saying here is that, hey, we might as well buy back our stock as rapidly as we can, and we're going to continue doing that as we generate cash. We don't have a lot of investments that we need to make in iGaming anymore. We don't have major investments we need to make in the Japan casino, which is currently under construction, or in Macau, or in Las Vegas. So as we generate cash flow, we're going to continue buying back stock. The market obviously liked what they saw because shares are up in trading on Thursday.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
The odd thing for MGM is I don't think there was any huge surprises in the quarter. I don't think there's any surprises for what we expect for 2025. The market just doesn't value this company very highly right now, and that's really the opportunity for investors. Management laid out their thinking on what the valuation of the company is right now and why they continue to buy back stock. If they continue to do that at this pace, that will at least slowly but surely increase the stock price because you're reducing the shares that are outstanding. So when you're looking at something like earnings per share, when the number of shares decline, the earnings per share goes up even if earnings are flat. So I think that's where we are with MGM Resorts today. Not real surprising. The growth opportunity for the company really comes within the next couple of years and then towards the end of the decade. So the first thing to look at is going to be beyond the core business is that iGaming business. Are they able to get that to profitability? They've talked about somewhere around $500 million in EBITDA or cash flow coming from that business. That would be an incremental positive for MGM Resorts if that does start to contribute positively. The next thing, and the ultimately potentially the biggest opportunity for MGM, is going to be their resort that they're building in Japan. They own 40% of that, so it's not a wholly owned subsidiary, but that could be a massive, massive winner. It's going to cost about $10 billion to build. If that's something that's going to generate EBITDA of somewhere around $2 billion, that's about what we get from Marina Bay Sands in Singapore. So I think it's very possible that we see numbers like that coming out of Japan. And if that's the case, that's going to be just another tailwind behind the company. It's going to be a while before we see that because that's not going to be open until 2030. But this is the optionality that I like for the company. You get a great value stock, management buying back shares, and the options for future growth basically aren't priced in at all. iGaming, not really priced in. Obviously, the Japan casino, not really priced in at this point. So that's long-term growth that we can expect over the next few years. And in the meantime, happy to see management reduce those shares outstanding somewhere around 15% per year. But let me know what you think of the results and the market's reaction. Stock was up very nicely in the asymmetric portfolio today. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.